I want to bring in Value Advisor founder and chief research analyst Howard Rosencrans. Howard, good to see you. Thanks so much for joining us.
Thank you.
What do you think is driving this big sell-off this morning?
This sell-off is very well justified. You had this huge rally that came about in starting at the beginning of October, built legs in November. It was warranted. You were coming off a deep, almost a stealth bear market over the summer. Well, it began to deteriorate in the month of November. You stopped seeing, all you got is the leadership. You've got big mega cap stocks of the singular drivers. Well, now you've got a lot of negative cross currents that have really started to hit here. Under the surface, you've got deterioration in the Dow transports. That's the best measure of really where the manufacturing sector is going. You've got utilities. Utilities are the barometer for interest rates. Both the transports and the utilities are off 15%.
Year to date?
Or 15% from their highs, which is virtually year to date.
Okay.
You've got high yield, which people have sort of overlooked. The high yield market, it's not just energy. The high yield market has gotten destroyed. You're now fully 570 basis points. That's the spread between governments and high yield. That was 200 basis points lower in May. That was 300 basis points lower at the end of 14. If you want to do M&A, you go into the high yield markets. You've also got small caps that are off significantly.
Right.
You've got eroding profit margins that every single time have foretold a recession.
And then you got the Federal Reserve probably going to raise interest rates into a slowdown. We know that the industrial side of the economy is already in recession, John Hilsenrath.
Well, so this is what I want to ask you, and we were talking to your earlier guest about this. Where are we in this business cycle? Are we towards the end of it, and is that what all this market behavior is telling us? Or are we more in the middle, which is what the Fed seems to be telling us, because they're just starting to raise interest rates now?
Well, you have a lot of cross currents in the economy. There's no question about it. I think we'll continue to muddle the law from an economic perspective. I'm much more concerned about the back end being the global. So the manufacturing sector is very weak. The consumer is actually getting better. The jobs data is pretty good. There's even some wage growth. However, at the end of the day, if you mix it all together and look at what the global and manufacturing again is doing, I think that's going to outweigh. And I think as we move deeper into 16, you're going to begin to see the economy deteriorate.
Do we go into recession in 16? Because already if the industrial side of the economy is in recession, does the rest of the economy follow a suit in 16?
I think it's more likely 17, and you often get that in the first year of a presidency.
Oh, okay.
You know, and I think it's important that we talk today about the consumer, which you just raised. You know, we're talking about oil prices falling. That's a net benefit to American consumers. And at the time of Christmas, you know, we're getting more at the pump.
Unless it leads to job cuts. Unless it leads to job cuts in the energy space.
Well, it is
it's not
in the
all
energy
positive,
sector,
remember.
but there are a lot of other parts of the economy.
It's a fabulous benefit. It's a fabulous tax cut, effectively, to the consumer.
We haven't seen it.
However, at the end of the day,
materialize.
that's exactly what you really haven't seen.
Yeah, it's really positive until it happens, but it hasn't
But if we look at the overall retail spend, I mean, if somebody was to tell you 2-3 years ago you were going to see oil go down 60-70%, you would have expected a much more vibrant economy associated with 5% unemployment and wage growth.
So instead, consumers are saving it, and it's helping them pay down debt and repair their savings. That's not a bad thing. That will help them spend in the future, right?
We'll see.
Yeah, I mean, you make a lot of assumptions. Yes, oil prices coming down would be a positive for consumers. They have more money in their pocket. You assume they're going to spend that. And consumer
they are
spending.
Spending it at some places. I mean, they're doing it at Amazon and Starbucks and McDonald's. There are a lot of like old school big name companies that are going great guns here, right?
Retail has been generally okay.
Parts of it
there's no question that brick and mortar is in a horrible shape and likely to continue to deteriorate. Retail as a whole has basically been fine, and I think that's very underappreciated today. But the reality is it's not so, I don't see it being sustainable for that long, given the context of the global economy.
We talk about just one quick thing. Sorry, John. Walmart still, even despite the warning on earnings, they still had 5 straight quarters of same-store sales growth in this country.
Stock is down a third of its value this year. Why?
Because they're raising wages, and that's cutting into earnings for quarters to come.
Right. I'm more looking at the stock picture as opposed to the economic picture. In terms of the stock picture, you're seeing revenues that are now going down in the S&P, and you're seeing labor costs that are creeping up. I mean, yes, you could take the other side and say, okay, well, we're going to pay people better. Finally, it's overdue. The polarity of wealth has got to begin to contract a little bit, and you can see the positive benefits. But at the end of the day, if you have a worldwide global fall off, and you have oil at $37 is not great for anybody.
So what,
it's just not. The dividend to that is...
What kind of returns do stock investors get in 2016?
16, modest at most. If we're talking about a recession beginning in 17, which is when I think there's a decent probability of it, you begin to foretell that in 16. So I think as we move later into the year, you're going to see the market erode. If we get a modest return, I'll be surprised. I think by the second half of the year, there's a bear market that's uncorked.
You're selling. You're selling. You're raising
stock.
cash.
Yes, we are.
All right, Howard. Good to have you on the show today. Thank you so much.
Thank you for having me.
Howard Rosencrans there.